claims. We're also going to do a couple of parts on Genworth's new product enhancements, and then also a new producer assist program that Genworth will be doing. Our first presenter today is Belinda Diamond. She's a LTC claims unit lead with Genworth Financial. So Belinda, you're up.
Thanks. Good morning, afternoon, whatever it happens to be, wherever you are. Thank you for having me today. My name is Belinda Diamond, and I am a claims manager for long-term care claims with Genworth Financial, and I'm located in Richmond, Virginia. The teams that report to me are Genworth reimbursement benefit analysts, so I'm quite familiar with those claims and that process. I want to talk to you today to give you some idea of how we at Genworth handle the claims that for the policyholders that you all work with. So what I want to do is give you an overview of our claims operation, kind of how we do things. I also have some very interesting information on statistics that I think most people find some of it enlightening, some of it surprising, some of it shocking even. And then the last part, I do want to talk to you about how you play a role in this whole process, what you can and should do or are able to do to help us along with the process, and most importantly, help our customers along with the process. So, our claims operation, we have over 400 associates, and we have them in 3 locations. We have claims operations in Richmond, Virginia, Lynchburg, Virginia, and San Rafael, California. All told, we have over 4,500 years of claims experience. Personally, my background is in workers' comp. I've been able to transition that experience in those claims operations to Genworth quite readily, primarily because we're both dealing with claims that have a life. It's not a pay once and done deal. It's a claim that has ongoing existence and an ongoing need for handling. So one of the things that we do pride ourselves on here at Genworth is that we do have an extensive training program. So our benefit analysts are very well versed in long-term care claims and everything that goes with handling those claims and dealing with a customer with our demographics. We have specialist teams that handle hospice claims, fractures. Those hospice claims obviously are individuals who are already in a hospice or receiving hospice care. Fractures, we look at those as claims that perhaps would have a shorter life and they're recoverable, so we handle those a little differently. And also we have a clinical team. We have a team of nurses and doctors who work with the benefit analysts to help us make sure that the plan of care are accurate and so forth. In each claim is assigned to a benefit analyst, and that analyst is the point of contact for that claim in all situations. We're 100% imaging. We have an auto benefit calculation. Our system that we have is designed to calculate benefits for a reimbursement product. We have comprehensive file documentation, our customer-friendly letters, an automated payment capability, and we do electric fund transfers for our customers. And that helps out a lot, particularly in situations where the person who's really handling the affairs of our policyholders don't necessarily live in the same city or state. And we find that a lot in today's society, in the way we live today. A lot of times the person that's handling those affairs are not in the same general or geographic location. We also take pride in how we treat our customers and how we treat our insureds and claimants. Our intake department is made up of 100% of nurses. So when a claim is called in, the nurse is an actual nurse, a medical professional that they are speaking to, that understands the situation, can ask the appropriate questions, and give the appropriate direction if needed. We also provide detailed plans of care, and that's important for folks who maybe don't really know which way to turn or what they really need to do. We send a nurse on site to the insured's home, and that person helps design or plan or create a plan of care appropriate for their needs. We also assist in facility inquiry program. So if people are looking at an assisted care facility or a nursing home, we're able to assist them in finding one that has proper licensing and so forth. We also work very closely with the Alzheimer's Association.
And Belinda, before you move on any further, I forgot to mention, if you guys have any questions throughout this webinar, I do have everyone on mute, and so on your GoToMeeting dashboard there is a place where you can type in questions, and I will be monitoring those. So if anything comes up, I'll interject to the presenters and get some questions answered. All right,
okay.
Belinda, go ahead.
Okay, perfect. Some general statistics about our claims operation is that every day we pay $5.3 million in benefits, which is just astonishing. But every day, that's the extent of our business, and every day we're touching that many people's lives. We have greater than $10.4 billion in benefits that we've paid. Our youngest claimant is 27, and our oldest is 104. And the oldest claimant also has the longest claim, which is 20.4 years. Although I think that youngest person is probably going to, may very well beat them to that. The largest single claim payout that we have at this point is $1.4 million. 71% of our claim dollars get paid to female claimants, and 51% of all of our claim dollars are paid to claimants with mental disorders, including dementia. And the majority of those that are in that last category are due to conditions such as dementia, memory loss, or Alzheimer's. The overview of our claims process is that the claim is initiated, and again, it's by a nurse when the caller calls in to report a claim. The intake nurse then reviews the policy requirements. They review what the care needs are, if there are any in place at this time, what the medical condition is of the insured, and so forth. After that, we also have a care coordinator. The care coordinator is the nurse in the field who will actually go to the person's home and do an assessment. They will do a physical exam of the person in, we call them demonstration assessments, in that they will have them do just simple functions and simple movements so that we can determine whether or not, or so the nurse who's doing the assessment can determine if what their care needs are and exactly what assistance that they need so they can develop that plan of care. At that time, after the intake nurse sets up the claim, an initial benefit eligibility analyst is assigned to the claim. They work with the information obtained from the care coordinator, the information from the intake nurse, as well as the information obtained from the claimant's physician to determine whether or not they meet the policy requirements. They will either approve or decline the claim, and then the claim is transferred to an ongoing benefit analyst who handles the claim from that point going forward. This has changed a little bit on the intake claims process. We're working in a process now where they take the direct transfers, meaning that when someone calls to file a claim, they will immediately speak to a nurse. We're showing great success in that, both in the fact that it expedites the claims process from the initial onset, but it also is showing a good payback or a good response from our customers, and actually serving them a lot better. They're calling with the need to file a claim, and they have a lot of things going on, and if we can take care of that at that initial call, our customer service is much, much better, and our customers are much, much better served. However, some of those, we do have a situation where sometimes the nurse is not available. Even though we have intake nurses in the 3 locations, there are times that calls get rather high, and they're not able to take that. In those cases, the insured or the person who called the claim in is called back within 24 to 48 hours. And again, they go over the policy, how the policy works, how the claims process works. They offer help in finding agencies or care providers and so forth. The local coordinator, again, is out in the field, and they actually go to the home. They'll help gather the medical and physician information. They will assess the activities of daily living, their cognitive status. They'll gather the medical and administration information. They'll assist in helping them complete any claim forms that they need or that we need to be returned to us here at the office. Then their care coordination supervisor will take all the information that the assessor gathered while at the insured's home, and they'll write up the plan of care. They'll develop that plan of care, and they'll provide that to Genworth, to the initial eligibility benefit analyst. On an ongoing basis, that care coordinator will continue to monitor the care needs. They'll continue to contact the insured for any updates, any changes in their condition, any new needs that may exist. And they'll notify us here at Genworth or the benefit analyst to let them know that something's changed. They've either, their level of care has changed, their need of care has changed, or perhaps it's a change in the equipment that they need at that time. Again, the initial eligibility analyst will collect all that information, look at everything that we just discussed, from the assessment to the physician information to the medical records if needed, and they will make a determination on whether that person meets the policy requirements. And the ongoing eligibility analyst will just maintain that claim file, maintain contact with the insured to make sure that our files are up to date, the plan of care is up to date, and that all reimbursements are made in a timely fashion. So moving on to the types of claims that we see here, the average claim duration for a home care claim, meaning that the person is receiving care within their home. If it's less than 1 year, if the claim age is less than 1 year, 83% of them are less than 1 year. After 1 year, 47% of all claims are home care claims. Nursing facilities, as you might imagine, doesn't have as great a variation. So 11% of our claims that are less than a year old have the insured or our claimant residing in a nursing facility. After a year, that rises to 23% of our claims. Assisted living facilities, only 6% are less than a year old, and then 30% of our claims after a year old are assisted living facilities. And generally what the transition that occurs is that they start in the home, they start receiving care at home, and then progress to the need of needing an assisted living facility. So that's why you see such a variation in those numbers. On claims that are less than a year old, our largest diagnosis is cancer, 31%, with the second being musculoskeletal. And those are the falls, the fractures, the falls, the broken hips, knee replacements, things like that. When we look at claims that are greater than a year old, 47% of those are mental. meaning those are our dementia, our memory loss, those claims along those lines. The Alzheimer's all fall in. Parkinson's falls into that category. So of all of our claims over a year old, 47% of them have something to do with the mental capacity or the cognitive impairment. 42% of our claims that last less than a year, meaning that within the first year they close, are due to either short recoverable illnesses, something like the fractures, while they can lead to ongoing issues. Oftentimes, if we have a fractured leg or arm or hip, those recover within a year. The other reason that a claim would last less than a year is a sudden terminal illness, which is generally handled by our hospice unit, or they're used in a single use. And that would be something like they have a stair lift installed in their home. Maybe they don't need ongoing outside help. They've got a family member providing that help, but they do need assistance with a particular piece of equipment. So those two will often close within that first year. The average length of a claim lasting more than a year is 4 years. So any claim that has a life longer than a year, the average is 4 years. And I think that's good information for folks when you're talking about the need for long-term care. And the need for long-term care insurance is how long does a claim last? And 15% of all of our claims last more than 5 years. In regards to benefit usage, most of our claims start in home care. In fact, 70% of our claims that we open, the first benefit paid is a home care benefit. The last benefit, while the ratio doesn't change in regards to the amounts, it does change in regard to the distribution. So home care as the last benefit, 62% are still in the home after that initial payment or when we make the last payment. 20% are in assisted living facilities when we make the last payment, and 18% are in the nursing facility. So you can see that when someone starts out in a nursing facility, at 17% of our claims do. Unfortunately, the last benefit is 18% in that nursing facility, so not a lot of change there. And again, the reason that we close claims, death obviously is the #1 reason, but we do have, with home care claims, 38% of those home care claims actually close because the individual recovers and is no longer needing care. The assisted living facility, you'll see that's the highest percentage as far as the category of exhausting benefits. So those individuals who are living in an assisted living facility and are being reimbursed for those costs, 27% of our claims will close because they've exhausted their benefits. So it's obvious by those numbers there that home care is the most economical, and I think most people already know that or realize that, the benefit of that. Okay, so who files claims? How old are they? Well, our average age of our claimants is 79. And married women tend to claim at an earlier age than single women and men. And I will draw no conclusions to that other than married women tend to claim at an earlier age than single women and men, for whatever reason that may be. Most people find slide 13 rather interesting. This slide shows the percentage of claims by diagnosis. So you can see by and far, and it also breaks down the demographics in regards to single women, single men, and married men. But you can see by far that dementia is our highest percentage of diagnosis. More claims than any other, the diagnosis is dementia, with cancer being second. Any questions on any of those slides with the numbers or statistics?
Yeah, Belinda, we do have a few questions right here. One question is, what is the length of claim? One question is, what reasons could a claim be denied?
Okay. By and far, the largest reason for claims to be denied would be that they didn't meet the policy requirements, meaning that most policies, not all, but most policies require assistance with at least 2 activities of daily living. The majority of the time, the reason the claim is declined is because they're not needing assistance with 2 activities of daily living. Other reasons for declination, almost all policies have the alcohol exclusion, and that means that if the reason for their claim or the reason to need assistance with activities of daily living is a result of alcohol or drug abuse, that is a reason to decline the claim. That's a very, very small percentage, but it is a reason. We do not decline a lot of claims. And I should add that when the benefit analyst has a claim that it looks like the person's not meeting the policy requirements or not needing that assistance with 2 ADLs, that file is reviewed by a technical specialist before we ever send out a declination. So before we decline any claim, it has been looked at by at least 2 people to make sure that we're not missing anything. But those are the 2 primary reasons.
All right, thanks. That's all for now. Keep going.
Okay, very good. Producer's role. What can you do to help the insured, the client, and help Genworth process these claims in the most expeditious manner? You can help us get information like the client profile, challenges, special needs, observations. We have nurses go out to the home and do these assessments. And if you're all dealing with an older generation, an older individual, they're very proud, and what they tell the nurse is basically self-reported, and sometimes it's not accurate. We try to set up the assessments where there's a caregiver or other family member present so that we can get a more rounded picture or larger picture. But sometimes if you're in a community where you know these people, you can actually provide that information as well. You ran into them at the grocery store and this is what was going on, or you visited them in their home and this is what was happening. Some of those observations are very beneficial for us because it even gives us a bigger picture of what the true situation is and what the true circumstances are. Also, assistance with this claim form follow-up, either facility statements or attending physician statements. While we can't release this information because of HIPAA, you can assist us in getting that information to us. Also, if you hear that your policyholder, your client, has been in a hospital or they just recently were admitted to a nursing home, by providing that information to us as soon as possible, that greatly helps expedite that claim. Because every time that a site is changed, and a site is being or a care need changes, like from home care to assisted living to nursing home or vice versa, any of those transitions, we need to know as soon as possible. And the benefit analyst then needs to do an investigation and a determination of whether or not they need continue to meet the policy requirements, as well as updating that plan of care to make sure that they're getting what they need. So anytime that there's a change in regards to their location or in regards to their disability, if you know that they've recently fallen and broken their hip, getting that information to us as soon as possible helps expedite the whole process. Prepare your client, review their benefits, and answer specific questions. Call us. We're glad to talk to you. We're glad to answer any questions that you may have. Stay current with the durable healthcare medical powers of attorney. Keep that information current, as well as the third-party notification information. In other words, if the insured is not able to provide information, is there somebody else we can contact? Is there somebody else that we can talk to? One thing that I will say that we run into is oftentimes the insured is not the one who's calling the claim in, and they're not the one who we're speaking with. We're talking to sons, daughters, nieces, nephews, relatives, neighbors, whoever they've asked to assist them or whoever stepped up to assist them. They did not buy the policy, and they may not be familiar. So educating the client, educating the sons and daughters, whoever, is a big help and can really assist them with that claims process because they know what information we're going to need. Help them with their claim. If they call you, direct them to our line, our 800 line, to initiate a claim, to start a claim, to speak to one of our intake nurses. Also help them with caregiver records, particularly if they're using an independent caregiver, not an agency. Oftentimes they need help in providing proof of payment, actually even describing how to fill out those forms, assisting with the care notes and the invoices, just by being an advisor to them. Certainly we are glad to help them and we'll do it anytime, but if you are speaking with them or if you have that opportunity to see them face to face, sometimes that goes a long way in explaining some of the needs or the requirements of their policy or the requirements for our claims department. Things to avoid is detrimental reliance. Don't commit that they're going to be benefit eligible. I'll fix this, don't worry. We can reverse this, or we can do something different, or sure they'll pay for that. Avoid those things until you've spoken to us to make sure that that's what's going to happen. Adding complexity, agent of record only. Also, leave the time of the day and number for efficient callbacks. You know, make sure that we're not just playing phone tag, that we can call back at a time when they're available or when you're available or best available for us to speak to. And understand the HIPAA guidelines. We can give information to an agent or producer by claim status, outstanding requirements, next steps, things about the process, more general information. What we can't give out without a release or an authorization from the insured is medical information or even financial information. We can't tell you the amount of the last check. We can tell you that a check went out, but we cannot give you that type of information. And the same is true for the medical information. So just be mindful of that as well. We appreciate you. We appreciate and look forward to working with you. And anytime that you have a question, please feel very free to call us. Either speak to the benefit analyst, you can speak to me, or any of our supervisors or leaders here. We'll be more than happy to help you. Do I have any other questions?
Yeah, we've got several questions. If we don't get to your question here on the webinar, and you've asked it, we've had a lot of people ask questions, somebody from Borden Hamman and Barry J. Fisher or Genworth will reach out to you based on what your question is, and we'll be sure you get all of that answered. And yes, a lot of people have asked, yes, we will be sending out a recording of this that will show the presentation slides again. One question that maybe you could address is, do you accept reimbursement claims for services by caregivers that are not part of a professional agency, and what caregiver qualifications do you require for reimbursement?
Okay. Depends on the policy, on the product. Some of our older products, in fact, most of our older products do not require a caregiver, independent caregiver, to be certified or licensed. The only caveat is that they cannot be a family member. MetLife is a little different. some of the RiverSource products, but the Genworth reimbursement, the older products do not require that. Now the newer ones, the Flex 2, 3, 3A, do require those independent caregiver requirements. They vary by product and by state because they depend on what the state requirements are. But some, for example, some states have certificates, some states have licensing. So that, in that regard, it varies. They are required to have some type of certification if the state requires it, and they're required to have an ongoing education credit or evaluation. But those are the basic ones. And they, again, they may vary by state depending what the state requirements are.
On another question is, do you have any idea of what percentage of claims requests you guys deny?
We get that question a lot. And to be quite honest, we don't measure it per se because it's not a metric that for performance here. We don't grade our benefit analysts by how many claims they decline. It is a very low percentage, probably less than 5%. The vast majority of our claims are accepted. They are paid. We do have a very, very small number that are declined. But again, it's not really a metric that we measure because it's not it's not an outcome we want to drive. It's not our goal.
Hey, Michael, I think I can respond to that as well.
Sure. Yeah, go ahead, Barry.
Yeah, Life Plans, which is kind of a think tank for the long-term care insurance industry, did a study back in 2007 for the Department of Health and Human Services, and they found that probably, you know, in the initial claims filing process, less than 3% of claims were declined, you know, on all the companies surveyed. And again, as Belinda mentioned, it was usually because people hadn't reached their, you know, the thresholds for being claims eligible. But generally, within 6 months, the vast majority of those 3% that were declined a claim were actually back on claim at that point. So it's a pretty small percentage of declines and of claims declines initially, and most people get there pretty quickly after that point. So
yeah,
that might be helpful.
Yeah, you're absolutely right on that second point, that even when the claims are declined because they're not meeting the policy requirements of the ADLs or the severe cognitive impairment, they usually, if it progresses, if they don't recover from it, then they're usually on claim. The large percentage of those people do get on claim.
Belinda, maybe you can speak to a claims issue that I had. It wasn't with Genworth, but we had a client who was, you know, they're starting to get pretty significant short-term memory loss. But the fact was that they still didn't need substantial supervision. So the claim, you know, they went through. The client was able to pass many of the cognitive, on the scale of what the neurologist was providing. You know, the testing on the neurologist was doing, it wasn't yet severe cognitive impairment, and then also the client didn't need any substantial supervision. So this was obviously a HIPAA compliant product. You know, again, there's some fine lines in that whole process, aren't there?
Oh, there certainly are. Cognitive impairment is probably one of the hardest areas to define and to evaluate. It's very, very difficult to sometimes determine how severe they are. And you can't necessarily go strictly by the MMS, we call it MMSE, which is the testing that you're referring to. We can't always go by that score. We find that some folks who are very intelligent traditionally score higher on those tests even when they have Alzheimer's or dementia than an average person. So we can't always go by that. It really has to be a big picture. It really has to be not only what the assessor says, but the medical records, of course, those testings are part of it, but it's not the sole factor to consider. It's that substantial supervision is really the key, and their safety. It's whether they are safe for themselves and for others. Some of the things that we consider are, do they wander? Are they able to stay in their home? Are they able to be in an assisted living facility, for example, but they have to be locked in? They can't leave. Those are the types of things that we look at when we look at a claim for cognitive impairment. It's not, I think we all have short-term memory loss at some point, so it's not just, it's a little bit more than just the aging process and that short-term memory loss. It's a little bit more than that. But it is very difficult, and there are a lot of factors to consider. It's not just a number. It also, as you get more and more familiar with cognitive impairment diseases, dementia, and Alzheimer's, there's several different variations. So even the time of day can make a difference in those scores. So that's why it's so important to look at the entire picture of that individual and what they're going through and what a usual day looks like for them.
Great, thank you.
Another question I was asked is, does your claims unit, Belinda, is that, and all this claims information, is that specifically for the standalone long-term care products, or do you guys also handle claims for the TLC linked benefit product and the long-term care rider on the Foundation Builder and Asset Builder IULs?
We do handle the TLC products. The long-term care portion of the TLC products are handled in our Lynchburg office, but the data is based on our Genworth products and our TPA products that we handle and administer here. Did that answer your question?
Yes, so your claims unit does handle the TLC claims, and you guys will also be, you probably haven't had any claims yet on the long-term care rider, but I assume you guys will be handling those as well?
That's right, we will be.
The process is the same? Okay.
Yeah, the long-term care portion of it, just like with the TLC. We handle the TLC in Lynchburg.
Right. And the long-term care rider on your universal life product, your just normal IUL, it does have care coordination and all of the benefits that traditional long-term care has as well. So
yes.
It will probably be the same claims process.
Be the same, yeah. Yeah.
Okay. And DJ, if you could unmute yourself real quick. I've had several questions that came up, and we weren't necessarily planning to discuss this, but there's been a lot of questions, so I think it might be something that you could address. But going through the Genworth claims statistics, it is obvious that y'all are paying out a lot of claims, and a lot of the questions are really around, what confidence can we have as distribution that Genworth is going to be able to continue to pay this high level of claims and the sustainability of their claims paying ability. Can you speak to that, please, DJ?
Yeah, it's a great question, Michael. Really good question. And I think when you listen to Belinda's presentation, the thing that really jumped out at me is that what we do on a daily basis, that this is real stuff. If you look at $5.3 million a day that we pay out every single day, I mean, this shows that long-term care events are real, that our clients are being impacted by it. Long-term care events are expensive, as noted by the $1.4 million claim that we have right now, and the long-term care events happen to all ages. It's not just people who are older in life. We have a 27-year-old policyholder right now who's on claim, and keep in mind, that's not your average 27-year-old person. That's somebody who had the forethought to go ahead and actually buy themselves a long-term care policy at a much younger age. So yeah, I understand the questions and concerns, especially when you look at the financials across the board. And one of the things that we are extremely focused on is our claims paying ability and our reserves. If you go back to the end of the year last year, we did a very, very deep dive on what we called our active life reserve numbers and our disabled life reserve numbers. Disabled are the people that are on claim right now. Active are the people who are not on claim. We went through that whole thing, and as a result of the study that we instituted on ourselves, this is not something that the regulators asked us to do. It's something that we did on our own. We decided that we wanted to be more comfortable from even where we are with the $20 billion in reserves that we have right now. We added an extra $1.2 billion into those reserve pools just to make the policies even stronger. Obviously, there's a lot going on from an interest rate standpoint right now in the marketplace. Some changes that have come down the pipeline as far as with the way consumers are not lapsing their policies. And as a result of that, we're having to make some changes to current pricing. I think a lot of us are seeing that. We're seeing that across the industry as well, so that's going to help out too. And then the other thing to keep in mind, one of the huge benefits of working with Genworth is that right now we have a lot of policyholders. We're currently at over 1.2 million policyholders. Each one of those policyholders is paying upwards of $2,000+ per year. So if you think about that from a dollar cost averaging standpoint, we've got a lot of money coming in every single year. That's going to help keep these that claims pool refreshed in full as we go forward. So we're very confident in things. The most important thing to us is that we keep the promises that we made to our policyholders, and that's what we're doing right now.
Great. Thanks, DJ. One other question, and then we'll move on, that I thought was interesting. Someone commented and said that they have had difficulty more recently collecting or finding out information of costs from specific facilities in the recent future. Is there any tips, DJ or Belinda, for if you had a family member that was that needed some care and you have a policy, but maybe that family member didn't, but you're just trying to find out the cost of care in the area? Is there any tools or resources available at Genworth in order to help with that?
Well, we do. Genworth, the claims department is not going to provide that information. However, we do work with, we have a sister company called Care Scout, and they can assist in some of that, providing that information. So we will release that number, and they can certainly call Care Scout, and there are individuals on staff there to help in some of those situations, provide some of that information.
And to take that one step further, Michael and Belinda, in our current policies that we have that are sold everywhere in the country right now, obviously we have our privileged care coordinator, as Belinda mentioned, along with our sister company, Care Scout. And that will help policyholders in the event that they wind up going on claim. It gives you the ability to make some phone calls into Belinda's unit. We will have people from Care Scout come out, sit down with the families, help build a plan of care. They'll help find services in the neighborhood, whether it's something in the community, whether they need help with local facilities that are available as well, free services, Meals on Wheels, things like that. They'll even help with claims forms. Now, that, again, is going to help the policy holder. But the other thing that we will do is we have a provision in the policy called Caregiver Assistance. And what that will do is that will allow for that same privileged care coordination services through Care Scout available for that policyholder's entire family tree. And we don't care how big that tree is or how deep the roots go. If it's a brother, if it's a sister, if it's an aunt, an uncle, a grandparent, we're okay with that. Now, we will give assistance through Care Scout, through this service, for family members for free over the phone, and we will give it for free over the internet. If you do want that individual to come out and knock on that door for a non-policy holder, we will do that as well, but there will be a charge for that, but it's a much, much reduced charge. So we have that available in the event that you have a family member who is not claim or who is not able to get through underwriting.
Gotcha. That's great. All right. Well, there are a number of other questions. You guys keep them coming in. We'll be sure and get back to each one of you with answers to your questions. But for the sake of time, I do want us to move on. And Chris, you're up. Chris is an RVP with Genworth, lives down in Houston, Texas. And Genworth has a new program called Producer Assist. And what they've done is they've hired a lot of new folks, or changed the role of a lot of their RVPs to where they will now be able to provide an additional level of support from what just working with us at Belinda and Borden Hamman provides. So they'll provide sales support, training, product info, just a very nice additional level of support. So we've been doing it for a few months now. Probably a lot of people on this call have worked with some of the Producer Assist RVPs, and I'm going to have Producer Assist RVP actually reach out to each of you that registered for this call and introduce themselves, just so that you're familiar with them and know them if ever you have any questions or concerns or need some sales assistance. But Chris, maybe if you can dig in a little bit and tell us a little bit about what you've been doing and maybe a success story or two.
Yeah, no problem. You know what, I thought, can you hear me first off? Make sure I'm off.
We can hear you. Yep, we can hear you.
Okay. Yeah, I mean, I think this was this claims call that we just had, or claims presentation we just had, is a really good lead-in to kind of the importance of this Producer Assist. And I want to just give a quick background on what the thinking here and the rationale of why we're doing this. And I think what we just heard is, the amount of claims we're paying out each day really illustrates that long-term care planning is real, and this is something our clients really have to have and really need to have. The average claim age is continuing to grow, and the cost of these claims are continuing to grow. So our clients really have to have a plan. And what Genworth has done over the last year and a half is we really did a study on what's going on within our distribution and how can we get better. Because we're tasked in the field to grow this industry. And what we found is over the last couple of years, the initiated or the active producer base inside of long-term care has been on the decline. So how can we get that back up and engage new producers into the long-term care planning process? And what we decided is we're going to create this new Producer Assist model. And this is a resource for you out in the field to help you get to those and help us meet those objectives of growing the industry and meeting those planning objectives for our client base out there. So really, what we did is we created smaller territories. We've got 45 territories now throughout the country. And our objective is to get out there and engage at the producer level to help educate and, oh my goodness, sorry about that. Of course, as soon as I start talking, someone's knocking on the door. So to help educate and get our producers more engaged into the long-term care planning process. So what we're going to do is we're going to be in the field reaching out to each and every one on this call to see how we can do that. And we can get as deep as you want. We will help you from just keeping company updates, if that's what you're looking for, or what we'll do is we'll go even deeper. We'll work with you and partner with you in your book of business. Now the idea here is it's as simple as today, if we have advisors doing 1 to 2 policies a year, if we can partner with them, engage with them, and get them to do 1 or 2 policies a quarter, now we're growing the industry. It's as simple as that. And that's what we're going to do. So we'll help with you if you want to just industry updates, you just want to keep abreast of what's going on. Plus, we'll also get out there and we'll do client workshops. If you want to be really engaged and you want to partner up, we'll help you across the platform of putting those webinars or seminars together and do presentations and get out there in front of the client base. We'll even go as far as doing assisted sales. If you feel like you want to have someone as an advocate for you while you're talking with your clients, we'll be there to help engage in those conversations as an advocate on your behalf and to help you to sell those long-term care plans. So really think of us as a resource to help you grow your business and engage in long-term care in more of a grassroots effort from an education standpoint at the producer level and marketing out also to your client base and educating the client base on the need for long-term care, which is, I think, first and foremost, because we all can agree that our clients need that. Now, as far as, success stories, yes, we've had some good success going through this. We launched this program in January of this year, and we're starting to see our efforts starting to pay off. And here in Houston, I've got a couple of producers who have really engaged in this program. I've done webinars. I'm constantly doing webinars, and also I'm booked each week with seminars. I'm getting in front of the clients. They're booking, the agents are booking the seminars. I'm coming in and doing the presentation. If it's a small fee I have to pay, that's no big deal. I'm happy to do that type of things. But I'm able to get in front of the client and talk about the long-term care planning and the long-term care need. So far in this territory, it's a new territory, but we have been, we're up over 100% to plan since June. So it's really starting to pay off, and the advisors who were doing 1 or 2 a year, I've got advisors now doing 2 or 3 a month. So when you engage like that and really partner, we can really make an impact and really grow this business. And remember, at the end of the day, Genworth is dedicated to long-term care. We want to be here and we want to grow it, and partnering with you out in the field, we can do that. And our team, like I said, is 45 people strong, and most of these people have been with the company at least 8 to 10 years. A lot of them have, in varying roles, and they're very knowledgeable about plan design. They're very knowledgeable about having the conversation about long-term care, how to engage in that conversation about long-term care. So we can really take a lot off your plate and still be of value to your practice. And just kind of leave it right there. If anybody has any questions, or if I missed something you want to add, want me to add on to it, I'm happy to.
Yep, we've had really good success, particularly out in the California area and Los Angeles area, where we've ramped it up a little bit earlier, and so we've been very pleased with the program. But again, guys, you still work with your LTC reps here at Borden Hamman. We'll still get you your quotes, provide sales support, anything you need. This is just another layer of support that we're now able to provide for you. So, Chris, I appreciate it. And next up, we've got Barry. He's going to talk about the best story in the long-term care industry right now. And Barry, you're up.
Yeah, you going to move the slides for me, Michael?
Yeah, if you're ready.
Yep, I'm ready.
All right, go.
And let me just mention a couple of things. Producer Assist in California has been terrific. We've seen a huge uptick in proposal activity, not just with Genworth, but with all of our carriers. And so, yes, I mean, wherever you happen to be working with Borden Hamman and Barry J. Fisher Insurance Marketing, you want to get on board with that. A couple of things you see the slides. You're seeing some slides here that are a different variation on something that we've talked about for the last year or so. And I think we can tie this back. A couple of things we can tie back to Belinda's presentation. Number one, if you recall, 42% of long-term care claims are less than a year. So I want to encourage you that even if you can, sell somebody 1 or 2 years of benefits, it's helpful for them. Okay, that's number one. Number two, while Belinda wouldn't draw any conclusions as to why women, claim earlier, the simple fact is that the industry trend is gender-specific pricing. So what you're looking at here is a comparison of California rates, which are still unisex rates, against the gender-specific pricing that has taken over most products in California and around the country. And the simple fact is, and we've also been saying this time and time again on every webcast we've done in the last year or so, is that at some point, Genworth is going to reprice the California product, and they're going to go to gender-specific pricing. So anybody who's taken this message seriously, and I'll give you an example of somebody who may be on the call, and many of you know from our meetings in California, Scott Redson. He's been one of our top agents for the past number of years. When he saw the writing on the wall of where we're probably going in California, he made a list of 100 women that he knows. Now, how he got that list, I'm not exactly sure, but 100 women that he knows, and he is systematically working those prospects, and we're seeing lots of business again from Scott currently because of this. So again, I'm not going to dwell on the specific numbers. You can see Genworth is a bargain in California. It's not going to be a bargain forever. Okay, this is the time for you to be. Go to the next slide, Michael. You can see where pricing is going. Flex 1 is what we have in California. Oh no, Flex 1 is what we have in California, I believe. The Enhanced Flex 3 is the new product nationally. So we're not exactly sure when Genworth is going to make this move in California, but we think that it's probably coming, and you need to get on the stick with this. So that's my only message for today, Michael. Great webinar, very informative on the claims front. Okay?
Very good. All right. Thanks, Barry. Now, we do have a new product that has been released. You can see the map here in most of the country, not in California. So those of you folks in California, if you want to see information on the new Enhanced Flex 3 that the rest of the country has, you're welcome to stay on. Otherwise, if you're specifically in California, everything else is, on the remainder of this webinar is going to be related to the Enhanced Flex 3 product. So feel free to proceed with your day. But I do want to turn this over to DJ Mormile, who is, again, a strategic account manager with us. We've worked with DJ for a number of years. He's been a big support. But there's a few changes that have been made to the Flex 3, and that's what they call the Enhanced Flex 3. And I'm very excited about them. I think they're very positive, and they listen to some feedback from us. I know Barry and I both talked with some of their product development guys, and so we're seeing some of those ideas that we gave them have actually been put in the new product. So we're grateful for them paying attention. But DJ, I'm going to turn it over to you.
Thanks, Michael. I appreciate it. And thanks for sticking around. For those of you who are either in California, you want to listen to what we have available in the rest of the country, or for those of you who are in Texas or elsewhere and want to find out a little bit more about this new product that we're very excited about here at Genworth. As Michael mentioned, we launched what we are calling our Privileged Choice Flex 3 Enhanced. I know it's a mouthful, but our Flex 3 Enhanced product in about 35 states about a month ago. Since then, we've seen a tremendous uptick in volume of illustrations that are going through the system right now. We're starting to see apps starting to flow in as well. So this is something that we are really excited about. Michael, would you go forward one slide, please? Now, I want to give you a little bit of an overview on really what we're doing here. As Michael mentioned, not only did we launch this product, but we also wanted to make sure that when we were happy with the Flex product that we had available, but we wanted to make sure it was very relevant in the marketplace. So what we did, we went out there and we gathered feedback. We spoke to distribution partners like Michael, like Barry. We got their feedback among quite a few other distribution partners out there. We spoke with individual customers, wanted to find out what they were looking for in a product. And then we went really back to the drawing board. And what we found is that consumers want a product with more benefits, a lower price point, and more options for them. So we took a look at our Flex 3 product, the one that was available up until last month, and we decided, you know what, it's time to go ahead and refresh this thing. Let's tweak it a little bit. So I want to give you a little bit of the highlights as overviewed on this slide right here. First of all, what we did was we lowered rates. It's pretty rare that you're going to hear a home office guy like me, a carrier guy like me, talking about how we are lowering rates, and that's really what we did from the old Flex 3 product to the new Enhanced product. We dropped about 10%. We added a benefit. We added a return of premium benefit onto the policy that was not there before, totally free of charge. We gave the consumer the ability to add on more coverage later in life. So therefore, if they want to buy this Flex 3 Enhanced product, 10 years from now, they decide that they want to go ahead and buy a little bit more coverage, they have that ability too. They don't have to buy the Flex 12. They get to add on to the current Flex 3 policy that they have. We changed the couples discount. We also gave you an option to remove the waiver of premium on there. And we made some adjustments to the informal care provisions of the policy as well. So let's go ahead and go forward and really kind of give you a little bit of a better breakdown on the way the old Flex 3 product worked versus what the Enhanced looks like right now. The great news is that if you knew our old product and you liked our old product, it's not changing dramatically. We're not taking anything out of it. We're just enhancing it and making it a little bit stronger. As you can see here, the core 4 exactly the way it was before, standard benefits exactly the way they were before, from the old Flex 3 product to the new enhanced. No major changes there. But if we flip to the next slide, that's when we're going to start to see some of these new enhancements that we talked about. First of all is the couples discount. I see this as a huge, huge benefit for us. In the past, we were always a carrier that loved working with couples. That was where kind of our sweet spot was. And in the past, to get any sort of a couples discount, you had to have 2 people apply as part of a couple in good faith. And if they were both approved, you would get a unisex rate for both individuals. If there was a declination on one of those 2 people, then it would revert to the singles rate minus 15%. But you still had to have 2 people apply at the same time. What we've done is we've changed that. So instead of having 2 people apply, now we will give you, call it a spouse in the house discount, to where if you can say, I am part of a couple, and Genworth considers a couple really 2 people living together, sharing expenses for a period of 3 years or more. So basically, if somebody else can put up with you for 3 years, you get a discount. If you can say that you're part of a couple, we'll automatically give you a 15% discount. If you can apply with your spouse, then we will give you the benefit of that unisex rate. So huge benefit on the couples discount, makes us a lot more competitive. The next thing that we have here is the informal care. Unfortunately, fraud is something that we have to be very, very careful of with these policies. The way the old Flex 3 policy worked, we would only allow informal care from an agency. Now we have the ability to also not only get that agency care, but if you have a family friend, somebody that you go to church with, a neighbor that lives down the street that is willing to provide some sort of ancillary care for you, call it chore services, running out to the store to pick up some groceries for you, cooking, cleaning, dragging trash cans out, things along those lines, we will offer 50% of your home care benefit to be able to be paid to those informal caregivers to take care of that assistive care around the house. It's something that's not on the current policy. If you want, or on the old policy it was not available. If you want it on the current policy, you can put that on there as well. So another thing that the distribution partners really, really wanted. If you're interested, it's available. Michael, flip over 1 slide, please. Waiver of premium. This is something that we've always had on all of our Genworth policies, and we will continue to have as we go forward. What this says is that you buy a policy today, you go on claim down the road, we're not going to ask you for any more premium dollars. But now we have a change. We have the ability, if you are okay with that, you have the ability to waive that waiver of premium, to take that off the policy. Therefore, if you buy your policy today, you'll still have to pay your premium dollars when you're on claim down the road, but what it's going to do is drive that price point down. It's going to save you about 5% on your annual premiums. So you get to save a little bit of money that way. Some people are thinking, you know what, I want to go ahead and save the money down the road. Some people think, I like to go ahead and have a lesser premium today. It's up to you. We give you more choices, but it's now available where it was not available before. We have a return of premium available on the policy now, automatically included. It's a return of premium up to age 65. Therefore, client buys a policy, they're paying in for 5 years, they pass away, all the premiums go back, all the premiums minus claims go back to the estate. So again, free that we're adding in there to make the policy a little more robust and a little stronger. And then the last thing that I want to mention here is the increased coverage option. As I alluded to earlier, if your consumer, let's say, is 55 years old and they only can afford a call it $100 a day benefit today, but we know that down the road they want to purchase more, they would buy the Flex 3 Enhanced policy today, and then at, call it 65 years old, they'd be able to add onto that current Flex 3 policy at current Flex 3 policy pricing. Now granted, they would have to pay whatever their current age is, and they would have to go through underwriting, but they would not have to look at a new policy series pricing down the road. So again, another enhancement, another way to make the policy a little bit stronger and get your clients to want to go ahead and continue to work with Genworth. So let's go into pricing as well. Michael, if you would go a little bit further. As I mentioned before, we have a lot of consumers that said that they were very price sensitive. So we want to give you a snapshot on what we are looking at for states that are outside of California, currently using the Flex 3 Enhanced product. As you see right here, the green area where it's shaded shows where we win. Now granted, this shows our preferred best and preferred rates, but we at Genworth, we want you to keep in mind that 55% of all of the apps that come in that wind up being issued by Genworth are preferred or preferred best. So with Genworth, it's not impossible to get these higher rate classes, to get these better rate classes is probably a better way to say it. And if that's the case, your client's going to get get much better pricing. These are couples rates right here versus Transamerica versus Hancock. And if you flip forward one more slide, Michael, this shows single male rates. Again, very competitive for single males. This is an area where we historically haven't been the strongest in, but we are as we go forward. And Michael, one more slide. Single females, again, an area that we historically haven't been very strong in. We are, again, looking very, very good from a pricing aspect. So as you can see, we listened to your concerns. We wanted to be relevant. We wanted to make sure that we had a product that you would be comfortable selling coming from the industry leader. And if you haven't taken a look at the Flex 3 Enhanced product, if you haven't looked at the Genworth product in a while, we suggest you do. We think that you're going to be very happy when you do take another look. We really appreciate the partnership that we have. Thank you very much to everybody at Barry J. Fisher Insurance Marketing, Borden Hamman as well. Thank you very much.
All right, thanks, TJ. Everyone, thank you for attending. On behalf of Borden Hamman and Barry J. Fisher Insurance Marketing and Genworth, we really appreciate your business. We appreciate your commitment to the long-term care industry and the problem that we are solving for our customers. So we will be sending out a copy of this recording tomorrow to everyone that registered. So again, thank you and have a wonderful day.